Hello everyone, Simon here from the Whales of Wall Street. Hope you are doing well. First video in a few weeks, to be honest. I've been away, recharging the batteries as it were, but also keeping heavy research going on CBDCs, the different kind of projects that we cover on this channel. I'm at the event on Monday with Digital Pound Foundation with the likes of Ripple, Swift, Bank of England, to name a few. So we'll be rubbing some shoulders there with some giants of the space. I'm looking forward to reporting some information back to you guys, hopefully on Tuesday and Wednesday of this week. So the event taking place, invite only in London. Kind of looking forward to it, but around the topic of CBDCs again. So yeah, keep an eye out for the info that I bring to you guys over the next few days. But this links very nicely into the video today in terms of Quant QNT on the exchange, one of our favorite projects and technologies, APIs, whatever you want to call it, in our portfolio. Quant Network, absolute powerhouse. These guys, obviously, with the Quant token being utilized for the actual usage of its framework, of the way that developers use it, validators use it. It's got a limited supply. So from a scarcity perspective, you could argue that it's kind of like on the Bitcoin front, in the sense that it's just, that is the supply, there is no more of it. So as time goes by and the usage of this platform is used more and more, obviously that price will rise. We'll go into the token a bit later, but more recently in the last few days, those that know of or know the CEO and founder of Quant, Gilbert, was present in the last few days through the EU Parliament's information here around MiCA. Now this is about markets in crypto assets relating to regulation of the space. What's interesting about MiCA, which we'll go into a bit more detail in a second, is the potential exclusion of CBDCs and NFTs, which I find a bit weird, because then I'm like, okay, what are they actually targeting here? What are they actually regulating? And then my open question is, who's regulating and validating the CBDCs that are coming? This is an overall topic, guys. I was at randomly this weekend, I was at a Graham Hancock conference on Saturday, speaking to a couple of people, you know, the usual, like, oh, what do you do? And I talked about my involvement with Web3 and blockchain, not just with the channel, but working capacity as well. And the people that I know, the networking, etc. And we were talking about CBDCs and the way the world is going with AI integration, algorithms, privacy, security, etc., biometrics, and so on. And the one loop around question was like, these CBDCs, like, there is ultimately no regulation behind this. There's arguably no leadership behind this. Every country is doing its own framework, its own operation. We've seen recently with China doing the trade deals directly with the Arab nations without the use of the dollar as an intermediary or as a reserve currency, which is huge. We've seen the demise of the dollar, potentially the lack of power from the US moving forward. We're in a bit of a strange time, guys. Untreaded waters, as it were, in the next few years. I'm kind of, partially prepared in my mind, as I have been for a few years now, of the potential side of where humanity's going, where society is going. And rightly so, someone in the comments a few weeks ago was questioning my comment about my pension and where my money and my pension actually go to. I have no idea until I read through the pension company that I was using at the time through work, where my money was going, where it was being invested. It was going to pharmaceutical companies, to banks, etc. And I'm like, oh, okay, I don't really like that. But then the flip around comment from this person in the comments, which is absolutely bang on, is saying to me, maybe don't be so hypocritical, in the sense that I'm worried about where my money's going into these pharma and stuff, but I'm investing in companies that are arguably working with governments and on these frameworks to potentially bring the demise to society, change the way human behavior, the way we do and don't do things, and will we be penalized with our finances or being blocked from our finances because we haven't done X, Y, Z. And I feel that's on the horizon. So I've always thought with this channel, I have a partial duty to be very open-minded, and I do believe I am, very balanced in the opinions of the good and the bad of cryptocurrency, blockchain in general, and the technologies. I mean, I've worked in AI, I've worked in smart, I've worked in IoT, I've worked in Web3. I understand blockchain very well. I've got a diploma in blockchain cryptography, and I'm very heavily involved in various speaking panels and events throughout the space. And I know a lot of people at the high level, specifically in FIS, WorldPay. These are the top levels of finance in the world, guys. And the more I'm learning, the more I'm kind of half concerned as to what on earth is coming in front of us, and how many people out there don't have a clue. 90% of the population of the world will have no idea. It will just come to them. It will feel normal. It will just feel like an evolution, and not realize what's actually happening in the background. We've seen, like we reported maybe 6 months ago now, the integration of the digital pound, a wallet being created. So this is all on the UK government site. They opened it up. 20 companies were shortlisted, or at least applied, are now in the process, or the final stages of the process, to deliver the framework of a wallet. Now, whether that's forced upon us and we all have to use it, because if you don't, you can't use the currencies, etc., or not, is another question. But I'd like to think that some of the projects that we're invested in are behind that, and we might see a good fluctuation in the price, of course, if that ever gets announced in the coming months. Who knows? But looping back around is my conscious mentality kicking in to say, well, what on earth is actually going to happen? What on earth is going to, what are we going to see in front of us? How are we going to use things? How are we going to, be potentially controlled further? And that's a bit of a theory, conspiracy aspect, or whatever it is you might think. CBDCs do have some good elements to it. But yeah, the more I'm looking into it, the more questions I have, and maybe you guys do as well. And I'd love you guys to put some comments into this video about that, your thoughts, your theories, your concerns, your positive aspects to it as well, because I would like to take some of those with me to the event tomorrow and ask the really high people there as to, what do they think about some of this stuff. And I want to get some answers tomorrow. I don't want to just go there and learn. Well, of course I do want to learn, but I don't want to just learn. I want to get answers and help prepare myself and help prepare you guys out there as well for what might be to come. And I get this impression, certainly from the last event that I went to, that there's still more questions than there are answers, even from the people that came across from Bank of England at the time. The Electronium CEO was on the panel as well. And there was a consensus that we're still in this trial period. And we know this because we follow Project Dunbar, Project Helvetia, Jura, all of those ones, Icebreaker, which are all the formulations of the different pilot CBDC systems around the world, to see if all the frameworks work together, see if what API integrations. This is the reason why I'm talking about involvement in Quant, is because obviously Quant has a significant API functionality and an Oracle, using the likes of Oracle as an example of the cloud system, to integrate the interoperability aspects of various chains, and its own kind of unique sort of tokenization aspect with the QRC20 token, to allow the formulation of all these kind of frameworks to be able to work together. And they're very significant here in the UK, and they will be very significant worldwide as well. And particularly, as we mentioned here in the European Parliament, there's a multitude of projects now like Energy Web that we cover, IOTA as an example as well, through the European Commission, working heavily on the frameworks in the various different sectors that they apply to formulate this entire ecosystem. Now, you can talk about ecosystems like, I hold Zilliqa, for example, which has a fantastic ecosystem within it, mixture of games, developments, etc. You can look at things like Polygon, very heavy in gaming, of course, amongst other sectors. But what I'm really interested in is the finance sector. We're talking about trillions upon trillions of dollars here, guys, not silly Mickey Mouse money. We're talking about where the real gold is, right? And we can reiterate that with tokenization. We've covered multitude of times on this channel about tokenization of assets. I talk quite freely about the NFT spectrum of real estate, buying and selling houses, the utilization of smart contracts in real estate, the removal of intermediaries, so that actually a house sale based on algorithm, AI data, valuations, etc., all being automated, instant information and data, to, instead of taking 6 months to sell a house, it could be done in a day. And you can multiply that to a commercial level. We're talking about phenomenal amounts of money, the increase in growth of the economy, the speed of it as well, and the reduction in cost, utilizing digital or distributed ledger technologies, DLTs, and blockchain in general. And this particular article related from Quant is from the Citibank aspect, that we forecast $4 trillion to $5 trillion of tokenized digital securities, and $1 trillion of distributed ledger technology-based trade finance volumes by 2030. We talk about trade finance with XDC a lot, and Quant specifically too. They're very heavily linked, of course, with both the private and the public ledger systems. But for me, these numbers are huge, and this is just talking about two elements of digital assets, trade finance, etc., even real estate here. The bank estimates that $1.9 trillion will come in the form of debt, and the $1.5 trillion from real estate. This is incredible, guys. Tokenization. We're looping back round to tokenization, in my opinion, very heavily related to NFTs. However, there is a big conversation going on right now, as we just talked about in this article here. European Parliament approves MiCA, the market in crypto assets. Blockchain leaders share their thoughts. Now, this is related to MiCA here, so we just mentioned what that is, and we can discover here what MiCA covers in terms of regulation and what it doesn't cover. So in this particular aspect, we mention here a digital representation of value or rights which may be transferred and stored electronically using distributed ledger technology, or similar technology. The regulation draws a distinction between cryptocurrencies on one hand and tokens on the other. So we follow back down here, we can see like arts, EMT, electronic money tokens, and the combination of that, but also crypto assets that are not considered this. What's really interesting in this is MiCA, bear in mind this is a huge regulating body, to be honest, or at least the framework for it, does not include decentralized finance, DeFi, and non-fungible tokens, NFTs. And it also, apparently, NFTs are unrepeatable and backed by unique assets. Central bank digital currencies also fall outside the scope of MiCA. So I'm sitting here going, right, there's a really fanatical aspect of CBDCs right now. Quant's heavily involved in these, but he mentions here, this is Gilbert quoted here in this particular article, what would the impact be and what to do next? Okay, so the passing of the first set of comprehensive digital asset regulations is encouraging. It would be interesting to see how much the UK aligns with the UK regulations moving forwards, or if it will take more of an open approach to boost trade and economic growth. We just talked about that. Rules must be flexible, dynamic, and evolve with the times. Now, this is really, really interesting that he talks about this kind of stuff, because they have a massive obligation here about CBDCs, talking about tokenization, but yet we loop around to say that these two aren't necessarily covered by MiCA, which is really interesting. So who and what is regulating CBDCs? Who is creating this infrastructure? Who's going to decide and not decide what does and doesn't happen for us in the public domain and wholesale as well? Now, I do see typically, first of all, that CBDCs will be very wholesale related. First of all, the public domain may be a bit longer approach after the trial's complete. And you can imagine that being integrated slowly. And what was really interesting about the last Digital Payment Foundation event that I was at, they were talking about the complexities of cashless society, and how they would already plan this years and years ago to remove cash and change over to digital formatting of money and digital wallets and the cashless payments. And at that time, people were very reserved against it. And what was interesting from their studies, of course, the pandemic kicked in and the transition to that sped up significantly. And their percentage of people that went from, I will never have a digital wallet, I will never use a debit card or a cashless payment, switched, it flipped on its head. And now we kind of try and rely on it as much as possible. I can't be asked to get cash out of the bank. I haven't had cash for years and years as it is, but I know people that were very against all of this now in the impression that actually it's convenient. All the people that were against it now find it convenient, and this is all about the psychology of humanity, right? So I sit here and I read all these different articles, I read all these different citations, and I get mixed feelings. I get a mixed mindset that actually I see the value in this, I'm investing in it, but what am I investing in? Well, I'm investing in the Quant token because I know that it's going to be used significantly as the years go by, as these technologies develop and as these frameworks develop as well, and the utilization of what they will power. In this example, we know that Quant has a very heavy affiliation with CBDC systems. But they talk about regulation, they talk about tokenization, and this is where I think that the QRC20 token will arguably, and this sounds a bit far-fetched, I feel like it could take over the NFT principle and be dominated by regulation and validation through its tokenized system, which of course it is trying to do through the MiCA framework, and all of these kind of things as well. And we've got to remember, like, there's also the conversation around digital securities. What is a security token? I'll leave the link to this PDF in the comments below. But referring to slide 4 is very interesting about the breakdown of what they determine to be security tokens, i.e. things that are related to real estate, debt, derivatives, stock markets. And they also talk about here Bitcoin as well, potentially as a security token based on its utility and things like that. But what's really interesting is all the other aspects of tokenization, the insurance aspect, the lending aspect, borrowing, etc., how this all complies. And we know, looping back, that Quant will power a lot of these areas too. So this is called The Securities Industry, A Digital Future Beckons. It's a really interesting document. It's not massively long. I do recommend to read it. There's some really interesting information and points in here for sure. But I want to build this picture that, these integrations of MiCA regulation and the fact that Gilbert's, making his comments and thoughts about all this and being excited about it, about regulation, about crypto assets, but also they are involved in so many of the other things that are apparently, according to the MiCA platform, not being covered by their framework, by their standardization. So it's kind of like almost that maybe NFTs, as they are, which are non-fungible tokens, basically anything that's not a ratio 1-to-1, could be a car, could be a house, could be a piece of art that has a specific value that's not a 1-to-1 ratio. So if I give you a £5 note, forget the debt behind it, if I give you a £5 note, it's £5, right? But if I had maybe an old camera, or I had my Pokemon cards that are upstairs, those could be NFTs if you thought about them in a digital format way, where they have a different valuation based on supply, demand, all these kind of things, right? So it's really interesting that we're in a position now where a lot of these companies, these projects, Quant's one of them, there's loads of others. Hedera are doing fantastic work with tokenized assets across different sectors, as an example, where we have the NFT kind of hysteria around artwork and crazy pictures and stuff, not really understanding the representation it could have in other different sectors, other different financial applications, which I do think more and more people are becoming more knowledgeable about for sure. But can we actually go further than that and move ourselves away from the NFT conversation and actually into more of a securitized token? So there's more validity, there's more security, there's more tracking ability for it. And that's where I see Quant and other projects going, moving away from that NFT conversation and moving into this. And that's where I kind of see the dot connection here of actually they are involved with MiCA. They are suggesting that NFTs and CBDCs aren't involved with this, but going through the Quant system and the API system, they would be. So it's really interesting to think of it in that way, in my opinion. And we know that Quant's partnered with so many different amazing companies to move this technology forward, to move this application forward, utilizing blockchain, DLT technology to tokenize everything and be that go-to project or company that will create that interoperability to allow, in the sense, API is basically where you've got a multitude of different computer systems or servers that can talk to each other for one reason or another. And this is the same principle within the blockchain sphere, within the interoperable cross-chain platforms, interoperable currencies, cross borders, everything. And that's why I'm a firm believer of Quant. Now, whether morally I should be investing in crypto in general is another question. For sure, I think about this all the time consciously, that there are crazy things coming, and blockchain and the integration of AI is going to have a significant impact on the world to come. And I think it's very important that we all take time to research all of these things, not just from an investment perspective, because I think as time goes by, you can really start hammering into what projects are really going to make a difference and what projects are going to be the next level. And I think Quant's one of those for sure. I think this is a token that will absolutely fly in price over the next 5-10 years and beyond, significantly. But there's an element of me as I go to these events, as I learn more and more, that actually, what on earth are we trying to achieve here? And here's a question for you guys. I know it's a bit of a weird ranty topic, but the question to you is that when CBDCs come in, which will pretty much probably be around November 2025 or a bit earlier, based on the RTGS switchover and the ISO 20022 implications, which already started, especially here in the UK and their banking systems. If this all happens and they have the ability to switch our money on and off, what happens to the money that we make in the crypto markets now and in the future, where they could just in a couple of years' time go, well, this wasn't a regulated space, so therefore we have got the trackability of all the payments you've made, transactions and stuff through your wallet addresses, etc. And we're just going to stop it. I'm going to block it. You can't actually even use it anymore. And that's what I feel like in the future. And this loops back to my conversation about great, MiCA, brilliant, to regulate crypto assets. But who is regulating and creating the proper frameworks? Well, I know who's trying to at the moment, for sure, like BIS, etc. But who has voted for the people that are going to validate this framework and what can and can't be done with it? And why have we not got a say in this? Well, we actually do, to an extent. There is a big thing on the government site here in the UK, an open survey that you can write your pros and cons about what you think about digital assets and CBDCs, but no one knows it's there. And I left this in the previous video around the Digital Pound Foundation. If you haven't seen it yet, go and check it out, because I left the link in there to go and do this. And we've only got till June. Typical fashion of many governments, hide things, put it out on the domain and say, well, we did put it on there, but we just didn't market it because time is running out. I think it's really interesting, guys. But all of that aside, Quant is a phenomenal technology and project, and irrelevant to what will happen in the near future, these guys are so ahead and so thought-provoking is unbelievable. Out of my whole portfolio, I would say Quant is my strongest one. I'm not talking about like how much I hold of it. I'm talking about how powerful an opportunity this is. Honestly, I think it's really interesting. I'm looking forward to meeting some of their team on Monday as well. And as I said, if you've got any questions, drop them in the comments, because I'm really interested to ask those questions to them. But all of that aside, guys, as an investor, maybe you're interested in this more, is the price points, where I'm looking, buying and selling, etc. I don't sell Quant. I'm holding it for some time because I do believe it's going to be absolutely phenomenal asset to hold with extreme values in the future. However, there are great opportunities to accumulate Quant at various different levels in a DCA format. Certainly one of those came out a couple of days ago. As we saw a few situations, I think with BitTrue, for example, where there's another hacking, which is crazy, but a lot of Quant, I think, was lost in that aspect. And that's why we had a bit of a dip down around this area. But we have scaled down to a very interesting area of opportunity, in my opinion. And it very heavily matches with a lot of diagrams and stuff that we drew back nearly 2 years ago, can you believe it, of an area of interest for both then and the future. You can actually see here, which is very interesting. You can check on my old charts. I haven't moved this around. But in this area of interest, look at that, bottom of this line. And this was no coincidence. I was basically basing this around various different points of volatility, particularly around these areas and these areas. Support and resistance, guys, is very simple. There's no magic to it. It's just looking at historic data of charts, right? This is not guesswork. It's just looking at the data. And right now, we're in a position where we're trying to stabilize some support at this 112 mark. Now, the way the market's going at the moment, there's kind of a lack of confidence at the moment, still a bit more of a downward trend. We had a nice spike up in a lot of the assets over January. We've seen that coming down quite a bit. It's a very repetitive pattern across whatever chart you look at pretty much in the crypto space. So looking down at this area, we did drop down to around 105. This is a great buy area for me personally, and certainly one that I always try and buy at. But I do still have my buy orders around 87, and I still, for the sake of it, have it all the way back down here around 50 odd as well. This 87 mark I feel is still very interesting, because I do believe that if we don't hold this support, we obviously test the lower regions of 100, and typically at that 100 mark, if you have a bounce up and down area around there, it tends to drop down to around that 87 mark typically. And we've seen that a lot of times in the past, not too many times, but certainly a few times, enough for me to sit there with some capital already in those limit orders. So at the moment, as I said, trading around the 112 mark, we're really trying to see if we can support this area. Now, I've changed the way these charts look. I've gone in for the high open close, or low, sorry, operation here, because this is where you start kind of identifying where the next day or the next few days might go. So this is where I'm seeing this right now, is that you can see there's a lot of activity around this area. So there's a lot of limit orders going on right now, and a lot of stability in the last week at this 112 scenario. You can see it was rejected significantly here on the 14th of April. I think this is when, the BitTrue news came out, failed, obviously came back up, bounced around, can't hold this support area, which we have tried to do a few times over the last few months. It's not working, so we're coming back down to these areas. If we fail this area, which I do think we could do, I wouldn't call it a failure, it's just its way of trying to balance and find its support and resistance levels over a longer period of time. We've matched this back here in December, and I think it was November respectively. Just get rid of these silly adverts. Yeah, November. So this is where we're playing now, right, guys? If that fails, I do anticipate us trying to attack that 100 mark again. If it gets to the 100, I would not be surprised if we do come back round to those $87 marks, purely because there aren't significant amounts of data at this 100 mark yet. There's been some good positive reactions at 100, which is great in the long run, but I do still think there's a lack of activity at that sub 100 level for us to go, cool, let's tick these areas off for sure, 100%, and then move up. Until I see that, I'm not fully confident in Quant rising significantly higher in the coming months, unless something drastic happens or macro events in the world change. From a trading perspective and an opportunist perspective, that's where I see it going. So that's why I have my $87 marks in there. But playing a devil's advocate, the DCA opportunities are also here. I do some manual buy orders here at this moment in time, and I do still have some order available around the 105, 102 mark as well, just to cover all bases. And that's a really important structure, in my opinion, to have to reduce risk as much as possible and try and get those lower gains where possible too. Now, the alternative is we do get support there, and then we start retesting the higher areas. But as you can see, these aren't really things that happen overnight. They do take a couple of weeks to really balance out and come in there. That's why I believe Quant is a very strong project to hold. It's got a lot of backing, obviously a lot of holders, and you can see that. You can see that in the way it reacts to each of these fib lines, and obviously the mentality of how traders are doing it as well. So you can see on the performance indicators on the right hand side here, it's not too bad, but it is creeping more and more into the reds. If you cast your mind back 2 months ago, all of these kind of different assets were in greens, and we were getting quite excited. And I said, look, just calm down, wait, we need to retest these areas. Some people always think that's going to happen in the next 48 hours. It never does, usually. It's usually a slow progress. So once you pull this whole chart out, you can start seeing a bigger piece of the puzzle, a bigger story. And this is where I'm mentioning again that I haven't seen enough data at the 100 mark to really confirm it in my head that we're beyond this now. So that's why I'm waiting in the background to try and get these lower regions. Let me know what you're doing in the comments below as well. Really intrigued to know. But my final points before we close this video off, the RSI is at the bottom left here, 39. This is why I'm buying manually right now. It's a good little buy point for me personally. The 28-day is showing 42. This is a really good area as well. That 90-day, I'd really love that to come down to around 45. And I do think if that happens, we'll see the 14 and the 28-day come down to those sort of maybe like 32 region and perhaps like 35 or so on the 28-day respectively. And that's where I see that kind of $87 mark. That's where I think we're potentially heading. But I'd like to be proven wrong in some cases, because I do think that I really enjoy it when people make money, and I'm sure many of you are doing day trading or weekly trading, whatever you are. I'm a long-term holder of quant, so obviously I'm trying to get them low as possible and just waiting for that massive future. And just a reminder, guys, the last bull cycle, 400, I would not be surprised if we didn't see a minimum of 1,000 in that next bull cycle. As I said, I do think that's coming around the latter stages of 2024 into 2025 as the CBDCs get rolled out. And more people are going to be jumping in going, oh my God, what's the CBDC? Who's powering it? What's happening? And that's just how it works. It's the same as the other markets. We had the NFTs, the metaverse, etc. I think that's going to be the next big topic with the integration of AI as well. So guys, that's wrapping up there. Thanks for joining us on this recent video. I know it's a bit of a long one, but I'm looking forward to doing more videos with you guys this week. And I will do my update on the Digital Pound Foundation event, which is occurring tomorrow, Monday, in London. We'll see you soon. Thanks, guys. Bye-bye.